if you sell your gold, most of what you sell will not trigger dealer reporting. It's the honor system. You're supposed to report it yourself. And when you purchase, there is no reporting on the other side. If you, let's just pretend you do your reporting and you trade some gold, you report to the IRS, yeah, you sold your gold and here is your gain, if any. The neat thing about it is that we then take the proceeds of that transaction and apply it to your silver purchase. Therefore, you never wrote a check out or sent a wire to purchase the silver. And in essence, no one asked you what to do with the proceeds of your sold gold. You sold it, period. You filed. When you take those proceeds and apply them to silver, now that silver is in essence paper trail free, because the loss in privacy, Jared, in and of itself is writing out a check, which you wouldn't have done, or sent a wire. So now you own that silver legally, paper trail free. You could show it if you had to, but otherwise it's a way to gather privacy through reporting.
While gold has surged in price, the real value today lies in silver and platinum. These two metals have historically lagged gold, but that's changing fast. Institutional demand is surging, with platinum drawing rare attention after years of neglect. The U.S. Mint hasn't produced platinum eagles commercially since 2014, making supply exceptionally tight. Meanwhile, silver, widely viewed as undervalued, is experiencing record physical deliveries. It's a quiet accumulation, led not by retail investors, but by the world's most sophisticated buyers. Behind the scenes, central banks and sovereign wealth funds are buying metals while quietly unloading billions in equities. Insider selling has reached levels not seen since the dot-com bubble. Yet, average investors remain overexposed to stocks, holding record equity allocations over 53%. Meanwhile, commodity contracts on COMEX are being physically delivered at unprecedented levels, particularly for silver. The divergence signals a deeper shift. Smart money is repositioning into hard assets, while retail clings to a narrative that's starting to crack.
I think right now the real value is found in silver and in platinum, and that's where there's been more demand recently than there has in gold, simply because, you know, gold has moved up so fast and silver and platinum had lagged behind from a standpoint of, you know, historical standpoint. Both in relation to gold represent an unbelievable value. So we've seen a lot of purchases of platinum. We've seen a lot of purchases of silver. So yeah, I think that in general, the public, Jay, is out of not really part of this rally. The rally has been by sophisticated investors, central banks and commercial banks and sovereign wealth funds that have been pushing the price higher. And even in that environment, where you're seeing, it's interesting because you're seeing the institutional investors sell every single week since February, equities and dumping at a level at the last 4 weeks have averaged $2 billion per week. The insiders selling equities. At the same time, mom and pop retail investors have a larger allocation to equities than ever before, even greater than the dot-com bubble at like 53%. So what could possibly go wrong there? And then at the same time, you have it inverted on commodities. You have the biggest money in the world, those that are the most sophisticated, standing for delivery, to the point where we're seeing the largest delivery in the history of the COMEX market in both gold and silver on the May contract. And we'll see what those numbers look like here on Friday. But again, you got quarter end on Monday, you got options expiration, and you got these silver contracts going off the board. It's going to be an interesting few days. I would suspect there to be probably even a little bit more weakness heading into the end of the year. But the public is missing this, and that's been done maybe by design, certainly, through volatility, through rhetoric, through lack of anything positive to be reported on gold and silver. So for those that have been buying, we've been recommending to them to buy silver and to buy platinum, because you don't get values like that very often. they're generational values when you compare them on a historical precedent to their relationship with gold, to their relationship historically. So yeah, there's been some gold buying, but mostly it's been silver, and then second would be platinum. It's interesting because platinum had been forgotten for the last,
Yep.
I don't know how many years, for a long time. We didn't sell much at all. Now there's a huge demand for it. The U.S. Mint, to the best of my knowledge, hasn't made a platinum eagle in a couple of years. They make some proof coins, but nothing commercial strike. Don't believe they're
I
doing
think it
any
was
this year or next year.
2023.
Yeah, and they're not doing any this year, and to my knowledge,
Yep.
they haven't said they're going to do any in 26. So you have platinum eagles as rare as hen's teeth. You have, maples and Britannias and the Krugerrands or Philharmonics. I mean, these are coins that you get up one shot at them and that's it. They're gone. They're really hard to come by. There are bars that you can get. So just as platinum is representing such an amazing value, getting the product has become more challenging. But we do have some bars and do have some coins available, but big premiums in relation, I think, to where they should be. Silver, on the other hand, across the board represents, in my opinion, value of a generation. When I think of silver, I think of the word asymmetrical, lowest downside, highest upside. But with all of this said, the only people that are taking advantage of that are the most sophisticated, well-informed traders in the world. And why I say sophisticated is because the amount of deliveries coming off of COMEX is record-breaking. It's groundbreaking. And it's not an easy thing to do. These are people that are very connected, they're very smart, and when they're pulling off as much metal off of the exchange as they've been doing, where are they moving it to? And who's taking possession of it? And these are things that I think, people need to think about. Who's got the ability to stand for delivery to that degree in gold and silver, silver in particular? The public, I think, Jared, is missing this largely, but those that have been buying have been focusing on silver or platinum.
With the gold to silver ratio hovering near 92, one far above the 200-year historical average of 45, experienced investors are strategically trading gold for silver. In ERA accounts, this switch is seamless and tax-advantaged. Sell gold, apply proceeds directly into silver, no additional wire or check required. This creates legal ownership with minimized paper trails. When the ratio reverts to its mean, this trade can potentially double your silver holdings, all without new capital outlay. It's not speculation, it's historical pattern recognition. Today's silver price, when measured in gold, approaches historic extremes near 1/100th of an ounce. This places silver among the cheapest it's ever been, relative to gold, in recorded history. Pre-1965 silver coins, silver eagles, and bars are available with unusually low premiums. The metals market rarely presents such asymmetrical opportunities, limited downside, massive upside. With premiums low and supply tightening, silver stands not just as a hedge, but as a high-potential investment many overlook. This moment is rare and time-sensitive.
First and foremost, there's taxes involved unless it's in an IRA. If it's in an IRA, it's very easy to do and is merited. If you sell your gold, most of what you sell will not trigger dealer reporting. It's the honor system. You're supposed to report it yourself. And when you purchase, there is no reporting on the other side. Let's just pretend you do your reporting and you trade some gold. You report to the IRS, yeah, you sold your gold, and here is your gain, if any.
Mm-hmm.
The neat thing about it is that we then take the proceeds of that transaction and apply it to your silver purchase. Therefore, you never wrote a check out or sent a wire to purchase the silver. And in essence, no one asked you what to do with the proceeds of your sold gold. You sold it, period. You filed. When you take those proceeds and apply them to silver, now that silver is in essence paper trail free, because the loss in privacy, Jared, in and of itself is writing out a check, which you wouldn't have done, or sent a wire. So now you own that silver legally, paper trail free. You could show it if you had to, but otherwise it's a way to gather privacy through reporting of selling your gold. And And it's that simple. We will help you get it shipped back. We will provide a FedEx air bill with our insurance on it. In most cases, we pay for it. And then we turn around and ship you back your silver free of charge by FedEx insured, whatever you want. And it's a wise thing to do, arguably, at these rates. It would have been even smarter recently when the ratio was a little bit higher. But anytime you're north of roughly 80 to 1, you want to be in silver. Anytime you're somewhere in the neighborhood of 50 to 1 or lower, arguably you want to be in gold. So yeah, if you were to trade your gold right now at a ratio of, what do we got?
Yeah, I'm
Roughly,
showing 92, 60, 69 today.
right. So at a ratio of 92, once it gets to 40, 45 to 1 or whatnot, you switch back. Well, 45 to 1 would represent roughly the 200-year average of the price, last 200 years. That's roughly the average of the price or the ratio between gold and silver. And then at the same time, it's still coming out of the ground 6 times lower than that. So when you talk about a generational value, it is. And has been for a while. That it exemplifies the statement that the markets can stay irrational longer than we can stay solvent. But yeah, it is the trade that I think people should think of, and it's very easy to do, and we can help people do it. We lock both sides of the order in. We send you the invoices. We send you FedEx air bills. You ship back your gold. We sell that gold to the marketplace, and we turn around and ship you your silver with the proceeds that you never wrote out a check for. It's that easy, and in some respects, I think it's a no-brainer, especially when you look at things like pre-65 constitutional silver, which we can do at prices that I've never seen on this stuff before. So there are really good values to be found in the silver market, even with silver eagles. But whatever you're buying, the premiums are as low as I've ever seen them. The availability is quite good. And the reason to do it is very, very sound. I guess, we just have to wonder how long before we see that ratio revert or correct. And I just think that there are very few opportunities that you will ever get like this in investing. I really do mean that. There are very few times where in order to double what you started with, you just need to reach the average of the past 200 years. So, that's not a lot. And, I think it's the way to look at it, really, instead of the silver to gold ratio, is look at it as the price of silver measured in gold. And they've mostly ranged between 1/50th and 1/80th of an ounce, but have averaged roughly 1/45th. But when you get anywhere near the extreme low of about a 1/100th of an ounce of gold, what that really means is that silver is one of the cheapest levels it's ever been in all of recorded human history. And it's a rare setup with unbelievably strong upside potential. Opportunities like this don't come around often, I guess is all I'm trying to say. And that's the truth. That's not salesmanship. That's just historical fact. And it's one that I would think is an opportunity that people should strongly consider, especially in an IRA. Because then you have no tax implications. You don't have to mail anything back. It's just bing and boom. And then you can switch back to gold when the ratio corrects and double what you otherwise, double what you started with here today, which is something that I think you could very easily see.